The following is a presentation of TFNN. It is now time for Trade What You See with your host, Larry Pesavento. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Larry Pesavento.
Okay, good morning, folks. I'm going to start out with interest rates today. I first posted the chart of the German Bund. That's the 30-year bond in Germany. This chart is courtesy of my good friend Andreas. And we are looking at a beautiful ABCD pattern coming in here. It's already backed off a full point from the D level. So it looks like that, the bonds are starting to move off a little bit. Now, whether that's going to be a risk-on thing with stocks or not, I'm not really sure. But we were able to see Europe close slightly higher. We had big drops in China, in Hong Kong, and also in the Nikkei. We haven't even approached a 3% drop here in the United States all during this thing, so it just shows you the strength that our market has had. I'll go over some of that in a little bit here because we hit some real important stuff yesterday, folks, that means something long term, but we'll do that a little bit at a time. Now, since we're talking about the bonds, I wanted to bring up the ETF for Treasury bonds. If you'll notice the low that we made here in early June, we've tested it again. This is the third time. It was exactly at the 61% retracement. We also have the ABCD pattern that is there, so that is a Gartley pattern. I actually should have drawn it from the X level way back in January, but there's also one coming in at September. That was a September low. You'll notice those cycle lows that are nothing more than 183-day cycles that have lined up. Now, anything below, 115 in this means that it's absolutely that's absolutely no good. That means the bonds would have to get above 155 in order to negate this TLT chart, if that is what we're looking at. So we want to watch that because it looks like we're getting ready for something really big to happen across the board here in some of these things. Now, we'll do a quick thing on the target on silver because we did make a interesting spot yesterday. We went way below where I thought they could go. I thought 1510 was going to be it, and as you can see, we went all the way down to 114.60, excuse me, at 1400. Wow. $14.60 an ounce. That was basically the ABCD 1.27 expansion, and also the expansion coming off of the April low coming in at 1.414. These markets still look lower to me, folks. I don't see anything that's going to make them, go anywhere but down for the present time. And that's the way I see it. We're going to have Norm Winsky on at the half hour. He always has some really good information for us, so that'll be really interesting to hear. And of course, we got the stocks opening in about 20 minutes, and we'll see what happens. First of all, let's just take a look at what's happened here in China. We'll not that I trade this, but everybody's talking about it. As you can see, we had that big move up, and we broke through that 20-minute line. We stayed there yesterday, then we gapped down below it. Right now we're at a 50% retracement of this whole move in China. That's from the low in 2013. We've already made a 50% retracement, and we made that in 4 weeks. The Chinese market is down $3 trillion, I believe. They tried to prop it up with 19 billion. Hello, I didn't think that would work, but who knows? It's just very overbought. It's very oversold now, so we could get a rally here at any time. But I think it'll be a short-lived rally, folks. I want you to step back and just think just a little bit here. Maybe don't think. I'll just talk a little bit. Then you don't have to think because then I have to think. So this is a great way to start a show. Okay, here's a couple of things that happened yesterday important. Look at the SOX index. We had a hammer candle forming. We opened lower, took out the lows of March 13th. and closed near the high end of the range. Now, it's got two gaps in there, which is very, very bearish. We got the butterfly top. So this market's in a downtrend. The question is how much and if it's going to rally. We don't know. But a hammer candle is the opposite of a shooting star candle, and that is usually perceived as bullish. So we could easily get a rally back into 1710 area in the SOX index and still be very bearish. Remember, our market is not sold off at all compared to the rest of the markets, so we need to watch that very, very closely. Now, the one that there's two of them here that mean a great deal. I'll post those together here. The first one is the New York Stock Exchange Index. We took out the low of the New York. Let's try it again, Larry. Wow. Can I start this show all over again? Good morning, folks. This is Larry. We took out the low of March 13th by 1 penny. Can you believe that? 1 penny. 204.11 was the low yesterday. The low on March 13th was 204.12. So this is a one tick. We also have the hammer candle looking at this here, so there's a possibility of a rally coming in. I'm saying a possibility because, folks, we have broken that March 13th low. I've been saying this for ever since March 13th. I said when we take that low out, we're going to be in a big bear market, and I believe that we are. It's a question of whether we get a bounce here because we are oversold. We've been chopping around here, but we've actually been above the range here of June 29th for a little bit, but we'll see. That's just what it looks like from looking at this candlestick pattern. Remember, I don't know anything about the fundamentals, and we'll see what's going on right now. Okay, now the next one that I wanted to talk to you about is the just the overall commodity prices. And I'm going to start out with one that we looked at yesterday, which was furnished to us by our good friend Mr. Z in the room here. And this is iron ore. Iron ore, steel, copper, all of these things are, been in massive bear markets. And this is not very good because, much of this stuff is consumed by China. And China is, the biggest, I'm sure they're a bigger consumer of some of this stuff than we are because they make more goods than we do. But the other thing is that much of the stuff that China gets comes through Australia. And if you look at the Australian market, what's happening to that? You'll see that it's in a massive downtrend. And I should post that in here to let you take a look at it. And you'll see that, this market is just cascading to the downside. It's broken all support, and there's really not much you can say except that this does not look good from a commodity standpoint because Australia is the big commodity producer of all this stuff, and when that stuff's not being bought, that tells you that there's something seriously wrong with this. I mean, we had a beautiful Gartley down there. We had a nice rally for about 3 weeks, rallied up to the 382, and now we're cascading down, and it just keeps going lower and lower. That's not a good sign. But look at all the commodities, that make the goods. Now, that's just part of the problem. Now, if you look at just the Dow Jones Transportation Index, look what it's done. It's just continues. Now, it was up a little bit yesterday, but it's continuing, to cascade to the downside. We're way below yearly lows already. These are not bullish signs. I know the Dow is held up, and I know the S&P, and of course the NASDAQ is held up. But like in 2000 and 2007, I don't think they can hold up for very long because I think the underlying reasoning for why these things are going down is going to become more and more apparent. And then, you'll start to see more of a cascading down in our market. But whether that comes right now or whether we get a rally in here remains to be seen. The things that make it susceptible to a rally is, one, the market is oversold. Two, the bond market has reached some real serious resistance, as we saw yesterday. And three, we have these candlestick patterns in some of the key indices like the New York Stock Exchange Index and the S&P Index, which tell us that we could have a good rally. But if we go below those lows that we made yesterday, there is no candlestick pattern there, and you're going to be heading down farther. I don't see any reason why this market can't go a lot lower from where we are right now. It's just a question of if and when. That's the bottom line. So we'll just say see what's going, and we'll see. We'll take a look here. We will double check something. Someone just Skyped me to see. I didn't even check this. I should have, because I watch this all the time, and that's the E-mini S&P. Our good friend Dr. Scott down in Florida told us that we did not go below the March lows. He's absolutely correct. We did not. We came really close, but we did not. We did not break the March lows in the S&P futures. We did it in the cash by one tick, but not in the futures. Thanks a lot, Dr. Scott, for bringing that to my attention. I hadn't seen that before. There were also, let me put this up here so you can take a look at it together, but we've also completed a major ABCD pattern down there also, which would tell us that we could get a little bit more of a rally, but we'll have to let the market tell us that that's what's, because we got a gap, remember, up around that 286 level in the S&P, so that's easy that we could possibly get to that, and it'd be probably nothing more than a short covering rally, but that's what we're looking at as we get ready for the market to open here this morning. It'll be a pretty good, interesting opening. Now, we have a question from someone in the den about the gold. Did gold form some kind of bottom? Mr. Z's asked that question. The only thing that I could see was that silver chart down there when it hit 1470. 1460 is the low. That was a 1.618 expansion. Gold got down to 1146. We've now rallied $16 from there, but I can't see any reason. See, 1140 was 1135 to 1140 was a number I was looking at in the gold, and it could be because we are certainly oversold in this market by a long stretch, and we haven't had much of a rally, but we could start getting rallies at any time, and so I would certainly keep that in mind for a definitely have a possibility of something like that happening. So it's going to be interesting to see if that's going to occur. Now, as we're talking here this morning, we have a pattern coming up here in the 4-hour chart in the Japanese yen versus the U.S. dollar that I think we should look at, because we just got down to the 61% retracement here. We're trading right at it right now here in the dollar yen. Part of that is related to what's happened in the Hong Kong, the Nikkei market, because this correlates about 95% to the Japanese market. So there's another reason if this holds this area here, we got a chance here for a potential rally coming into Nikkei, which some of this could follow through. Okay, we'll be right back after these words from our sponsor.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters. Plus. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video, giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Okay, folks, we're back, and we have a caller from the insurance capital of the world, Hartford, Connecticut. Bob, are you there?
Yes, I'm here, Larry. Good morning.
Good morning. What can I do for you?
I had a question about your gap analysis, and was wondering how you view gaps in the charts and whether it's, short-term bullish or bearish, or but I think that most gaps get filled, and that's what most technicians kind of do or believe. So if you could just kind of straighten me out on that.
Well, one of the things with pattern recognition, you're looking basically at a price chart, and I'm always looking at point D, to do something. But point C is very important too. So when gaps occur, and you're right, they usually are filled. There's only a few gaps that I can ever remember that are not filled. One of them in particular is January 1991 during the Iran-Iraq, during the Desert Storm with Iraq. We gapped up in the stock market. We're up 8% that day, which was one of the biggest days the market has ever had, and that gap has not been filled yet, but most gaps are filled. But what gaps tell me, Bob, it's a danger sign. There's something has happened. There's been a change in the continuity of thought. over the last 24 hours or during that gap time that some news has come in or some other information related to the market, possibly a crop report that tells us that something has happened. So when a gap occurs, I have to factor that into my price objective. So if I get a gap at point C, then I will factor in the CD leg as being a 127 or a 1.618. In addition to the gap, we have these long-ranging or wide bars that occur, and that's also another key indicator of things that we look at. So those are the real things to look at. But as far as major studies on gaps, I don't know of any in particular, because gaps are, well, they're more often now because we've got so many things to trade and there's so much volatility, but no study that I know of has, definitive statistically looked at gaps.
Okay.
Does that help? Basically, it's a danger sign. It's a sort of a wake-up call.
Short term, and then longer term, weeks.
Longer term,
later,
it won't make much difference, but short term, it makes difference.
Okay.
It makes a difference because of the fact that something has happened. That's why that gap occurred. Years ago, we didn't have this overnight trading. We opened up at 9:30, and then we traded till 4 o'clock, and that was about it. Now it's 24 hours a day around the globe. Which is bad for me. I enjoy it, but I'm not getting much sleep these days because the swings are so great. But they're really having some really wild swings across the globe that affect us too. So we don't have that luxury of an open and a close like we did before.
The other thing I wanted to just draw your attention to is our Russian economist Nikolai Kondratyov.
Kondratyov, yeah.
Kondratyov, yes. And some of his wave analysis really gets into the deflationary scenario that we've been seeing the last few years in all the commodities. So that's that and the presidential cycle. I think maybe, in 2016, we're going to see a nice bounce in all the markets, hopefully, and get out of this deflationary cycle.
Well, we'll find out soon. I think it's in China is where the big bulk of it is, and it'll, if China sneezes, the rest of the world's going to catch pneumonia, so we'll see what happens.
Thank you, Larry. I enjoy your show all the time.
Well, thank you very much, Bob. I'll send that $20 as soon as I get your address, okay?
Okay, buddy. Bye-bye.
Thanks a lot, my friend. You bet. Okay, in a few minutes here, we're going to have Norman Winsky on from Astro Trends to talk to us about some of these things, and we'll see if we can get some information from him. He sure gave us some good information last month, and we'll see what's happening this coming month. I know we have a Venus and the Neptune retrograde direct coming in towards the end of the month around the 28th or 29th. But maybe he'll be able to talk to us about that a little bit. We've had a really nice rally here in gold here in the last few minutes. I posted it in here. We went right up to the exact 61% retracement of the previous day's highs, up at 1164. That was $17 higher than the low, and 17 is the harmonic number in gold, 17 and 34. And so, this is, if gold can get above 1165, it's got a chance to move a lot more to the upside. Now, these markets are incredibly oversold, as you can imagine. So I am looking for buy points, but my buy point in gold was still down around the 1135, 1140 area. Okay, we'll take a little break here. When we come back, we'll have Norm Winsky on.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization memorization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's nadex.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Technomental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Technomental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Technomental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
If you're like me, you're always looking for ways to diversify your financial portfolio. Everbank's innovative market-safe CD can help you diversify while protecting your principal deposit. In fact, Everbank unveiled a new 5-year market-safe power metal CD, which combines the power of gold, silver, and copper. Metal prices are currently low, so this CD could really deliver. Consider the facts. You get exposure to 3 valuable metals in one index CD and have the potential to earn up to 45% capped upside payment at maturity if the metals increase in value across annual pricing dates. And should they decrease? No worries. There's zero risk to your principal here, as you still get 100% of it back. Keep in mind, returns are based on CD performance. No annual percentage yield or periodic rate of interest is paid on the CD. Intrigued yet? The July 9th funding deadline is quickly approaching, so hurry over to everbank.com/TFNN-CD for more information, including important product details and disclosures. Once again, that's everbank.com/TFNN-CD. Everbank is a member FDIC.
TFNN has just announced a brand new morning lineup that is geared specifically for traders in this volatile traders market. Every morning at 8 a.m., John Logan starts things off with his daily program, The Global Market Pulse. At 9 a.m., Larry Pesavento trades the market during the market open Monday through Friday on Trade What You See. At 10 a.m., Tom O'Brien hosts the Money Masters for the hour, and Basil Chapman hosts his Tiger Technicians Hour at 11 a.m. From 8 a.m. till noon every market day, these traders are with you as they provide up-to-the-second market information so that you can make the most educated and profitable trades possible. The new TFNN morning lineup is happening right now. Tune in to see for yourself what kind of actionable trading discussion they have each morning, Monday through Friday, starting at 8 a.m., live only on Tiger TV at TFNN.com.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Okay, we're back, folks, and I believe we have our friend Norm on the line from Astro Trends. Norm Winsky, are you there?
Yes, sir, Larry. Great to be on your show. Thank you very much.
It's good to have you on, my friend. Now, all we got to do is figure out how to coordinate these charts. Which one do you want to start with, my friend?
Well, we're just starting on page 1. No beginning like the beginning, right?
Okay, now page 1 would be the planetary aspect one, correct?
Page 1. It says interview notes at the top there. I was going to give a sort of a big picture overview because there is a common theme going here with, you mentioned, I was listening earlier, and you mentioned March the 13th. I remember that date well. I forecasted that date because the planets were doing something. My top favorite thing is when the planets do the what's called a station point. That's due to the rolling motion of the Earth. And if you look out in the night sky, you'll notice that the planets appear to stop their motion and reverse at these points on occasion. And we had one of those over the March 13th weekend, and the market made a low there. and then reversed and started going up. And so that was interesting. Then we had something similar happen in April, where I think April 16th, somewhere around there, I think I came on your show and forecast a top there. And that I think about the next day, Friday the 17th, the Dow dropped 350 points. And then we had May, where I forecasted the high day for the DJIA on May for the 19th.
Okay,
and also
Norman,
I had
Norman, that was yesterday's meal. We want the new menu now. I've got page 1 up, my friend. Let's go see where we are now and move on, okay? You're doing a great job, Norman. That's why I have you on. If you weren't doing a good job, buddy, as much as I love you, you probably wouldn't be on as much. But you're doing a good job. So you got page 1. Why don't you just tell us what you're looking at here?
All right, let's go to talk about what happened real quick in June. So on the 12th of June, we had both Mercury and Neptune having a station point. That's kind of unusual. We've sort of been having a theme in these double cycles lately. And so Mercury has to do with grains, Neptune has to do with oil. Here's what's happening with oil. Had a big move in oil here recently. And I said that Neptune, when the ruler of a commodity goes retrograde or direct, that's a station point, it often will have both a short-term and a longer-term effect. The longer-term effect, if it turns retrograde, is that it tends to have an overall negative pressure on the prices. Well, you just saw what happened here recently with crude oil. It kind of fell out of bed. Crude oil had a big drop here recently. So there we go. So I'll move ahead now. And so I had by the way, I had 2 big dates highlighted for June, the 12th and the 22nd. And on the 12th, the Dow, the stock market was whipsawing back and forth that week. And I sent out a nightly alert Friday night. The stock market had pulled back into mid-range, and I said, well, it doesn't look hot, looks kind of like a long shot. But to fulfill all the parameters of my planetary patterns here, we need to go down and test the lows by Monday's opening, and that's exactly what happened. I was kind of surprised, So here's what we mapped out. I put part of this chart up when I was on in June, and you can see here the blue line had the market going down until the 12th and then going up. We actually turned on Monday's opening, which was the 15th. That was one trading day later, and then we had a nice rally up, and then we made the high of the month on the 22nd when Jupiter was 120 degrees to Uranus. So moving ahead now, here we have the crude oil. I just talked about that. And we made a couple of nice turns there during June for my key dates. And then here's what's been the crude oil has been doing here more recently since the 29th of June approximately. You can see that. And I'm up to the, Larry, you might want to move ahead to the next page.
Okay, we're on page 4 now.
Yep, where the crude oil is.
Okay, I already
right at the bottom we have the copper.
Page 3 was crude oil, but let me double check this again, make sure I can get it up here. I'm on corn. That's page 4 is corn. Is that corn, the next one?
I think you went to one, maybe one too much now.
Okay, let me go back.
Go back one page.
Okay.
We'll get to corn in just a few seconds.
Yeah. Okay. Here, this one has copper and things on it, so we'll get that up here.
You can see the crude oil has been coming down. I think it's dropped about $8 or more here in the past week or so. I think that Neptune is a slow-moving deal, so I think this crude oil could be a lot of these inflation-related markets like crude oil could be under negative pressure here for several more months. Mm-hmm. Copper. A big deal on copper is this is kind of a Donald Bradley thing. I know you're a Bradley fan. This was my earliest research growing up in the scrap business. My family's in the scrap business. So Bradley talked about Jupiter, Uranus being the 41 business cycle, copper being very sensitive to the business cycle, and now we have the Chinese factor. They probably, maybe right after gold, the Chinese seem to love copper. And many of their deals they require copper as a collateral for many of their financing and so forth. Copper is a big deal in China, and so now copper's under big pressure here, and it's taken out this low that was in June. And so that's pretty bearish, I think, frankly, and you were talking about this earlier, I think there's a very good chance that we've seen the high for the year for the stock market. We probably topped back in May, That's why I wanted to talk about the last couple of previous months, because I think it's all part of where we're at now. Now, here's corn. You move ahead to the next page. It's on page 4.
We're on corn right now? Yep.
Yes, sir. You and I talked about corn back in June there. We both thought that corn was getting super oversold and depressed and was due for a rally, and bing, bang, bong, there you go. That June 22 date, Jupiter was in Leo. Leo has to do with corn, and that was a very nice retest of the lows, and then it was rocket time for the corn. Here's the near-term chart here. You can see if you go down the bottom, the second half of the page, you can see how, I'm sure you're very aware, Larry, the corn had a nice rocket ride here to the upside.
What do you see for it now, Norman? What is your...
Okay, well, the grains and metals tend to be lunar sensitive. And so on the near term here, I'd be watching for somewhere around the 15th of July, 15th of July, for the new moon, and that would be a possible turn on the grains. And especially, you were mentioning silver earlier, I noticed that. We're going to have a new moon on the 15th in Cancer. Cancer has to do with silver in particular. So if you were looking for a turn in the silver, that would be a good date. Now we're moving ahead to look into the future, Larry, on page 5.
Okay, now this is a very small print, so the folks that want this will have to contact you because it's going to be too hard for them to see it in Tiger TV. So if you could remember, that would be something that you might want to keep in mind. So go ahead,
great.
Fire away.
Just take one quick step back here to late June, early July, where we had a big lineup with Saturn and Pluto. Pluto has to do with debt, and it's in Capricorn, and that has to do with government. So guess what? That's all about sovereign debt. And over the July 2nd weekend, we were closed on the 3rd for the holiday. And so, are you there, Larry?
Yes, I'm here.
Oh, okay. You're okay. And so the planets forecasted sort of the Greek debt crisis here over the July 4th weekend, and I'm going to get to the bonds here in a minute. Show you how the fractal model for the bonds forecasted this whole thing, a big turn in the bonds for late June, early July. Back when I published that back in February, so that's pretty cool. And also in my analysis here from my July letter, a lot of this is coming from my July letter, also forecasted that due to some other planetary things happening, that if they had a vote over the July 4th weekend, I said that the Greeks were going to vote to party on, and I think that's what they did. They said, we don't stop, we're going to have, keep going. Don't tell us to not do our thing, Mm-hmm. So moving ahead here, now we got a big event coming up, by the way, next week. We got some huge things happening next week. About once a year, every 11 months, Jupiter goes around the zodiac about 11 and a half years, so about every 11 and a half months, Jupiter changes signs. This causes a shift in the different markets and the economy. And we look at both helio, that's from the point of view of the sun, and geo, from the point of view of the Earth. And so we're transitioning now from Jupiter being in the Leo to Jupiter being in the Virgo. And the Leo markets are corn, gold, and OJ. And so we're going to be shifting to Virgo, which is soybeans. If I remember right, you kind of like soybeans there, Larry. So I think we're going to get some emphasis here on beans, although Jupiter often brings an abundance, so and it's leaving Leo. So I think price-wise, the corn may start outperforming the beans over the next several months, Moving ahead here, now we got a huge deal coming up on the...
Is this on stocks, page 6?
I'm still on this page 5.
Okay.
I'm just scrolling down here now. Now we're down to item 3A on July 24th. That weekend is probably the biggest... there's something I'm going to show you in a minute where we had some other dates coming up right around the 14th and 15th, just on these single events here, sort of single event windows, where we have a big event coming up on the 24th weekend, where we have both Venus and Uranus are doing their station point thing. One is Venus is turning retrograde, and Uranus is going to turn direct, I believe, or they're both turning retrograde. Let's see. Sorry about that. Let's see. I kind of shrunk my window so I could see what was going on your side there. Hold on 1 second. I'm having a little trouble here with that. There we go. Venus turned retrograde, and like I said, Venus has to do with cattle, cotton, copper, sugar, wheat, and let's see. Then Uranus is also turning at that point. That'll be copper. So there's a double whammy here for copper. Now we're going to move down to, and then at the end of the month, we have another one of these things for the July 31 weekend. So look for a big change in trend for the stock market also for those windows. Here's what we have for the forecast for the stock market on page 6. We have the blue line as the forecast. I got you up till the middle of the month. If you contact me and get the letter, you'll get the entire chart for the month. Notice these little boxes in the top right corner where we have the planets and these red arrows. Those are the station points where the planets are changing direction. Those are high confidence change in trend points for the stock market. And so you want to give me a call here, and so you can get the letter. But basically, this is we've been following the bearish model here, and I said in the for the stock market. Oh, let me just read this real quick. The planetary index, this is what I wrote for the July letter, which went out on the night of Sunday, June 28th. The planetary index is indicating a very strong trend for July, whichever way the market is trending in the first few days of this month, beginning the June 29th, should be the trend for the month, at least until the July 24th weekend. However, during this period, there are huge energy clusters indicating big short-term changes in trend. I'm going to get to that in just a minute. Please see the key dates and activity calendar. Well, we're going to one thing we haven't done on the show here previously is look at the activity calendar. So I got a page of that coming up here. So anyway, you can see here how the black bars have been tracking the blue line fairly well, and indicated that we should be trending down, and that's what we're certainly doing. The last time I checked here today. Here's the calendar that's in the letter. It shows you this is a great thing, great tool. You can look on here, and it has the entire month. It's a timetable of planetary energy for all the markets I track. I track almost 30 markets. Just for example, I don't know if you can see this. Go to the next page there, Larry.
Okay, just give me a second, and I will get down there. That's the one that is. I see that one right here. Just a second. There we go. This is really difficult to see because this is where they need to get your letter, because this is just too small for our little menial eyes.
Well, I'll just do a quick summary then. Anyway, on this timetable,
yeah, we've only got a minute or two.
All these different markets, you can, in a matter of seconds, you can pick out what markets you should be looking at and on what date. So just for example, the top line is cattle. You can scan across the cattle line to see that the big date for cattle for the month is on the 13th. That's the biggest number. The bigger the X, the bigger the number, bigger the energy, the bigger the change in trend, potential change in trend. So the 13th is the top date for cattle for the month, and we can do that for the stock market. If we scroll down, you'll see stocks toward about 3/4 of the way down the page. Had a big one for the 29th, June 29th. Then we went over here to the July 4th weekend into the Monday, the 6th. We had a huge number there for 80 points is the big number. And we had obviously kind of a panic over the weekend there with the Greek voting. And now we got some more big numbers coming up for the starting on the 13th with a 64. And then a huge 2-day cluster, 98 points for the 14th through the 15th, and spilling in a little bit into the 16th.
Okay, Norm, we're winding up the show here, buddy. We'll have you on in another couple weeks, okay?
Well, we're coming back in a minute, aren't we?
No, that's I've got to do my wind up then. So we'll have you on in a couple
we
weeks.
Got to tell
okay?
people how to get a hold of me, right?
I'll do that when I come back.
Okay.
Yeah, put your number in there, and we'll have it for you.
I got it right on the.
Yeah, Skype it to me.
You take a hands-on approach to managing your investment strategy. You're always looking for the next trading opportunity to magnify your perspective. Direction Shares connects sophisticated traders with a powerful array of ETFs from a wide range of asset classes. The markets may go up and down, and you want tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch the Money Masters as they teach you the art of mastering money when it comes to trading and investing. Next on TFNN.
I posted into Tiger TV the information to contact our good friend Norm Winsky, and if you want to reach him by Skype, it's norm.winsky or norm@normwinsky.com. His phone number is 239-594-3939, and we've got George from Hong Kong on the line. George, are you there?
Yes, Larry. Thank you for receiving my call.
Okay, what can I do for you, my friend? It must be about the Chinese market, is my guess.
Yes, today's Hong Kong market go crazy. We dropped 2,000 points for one day. Mm-hmm. It break the major support. as you mentioned. And I would like to know, can I ask about your view on the Hang Seng Index and FXI?
Yes.
Please.
Well, we're at a 50% correction now in the FXI. We've gone below major support now. We broke that yesterday in the Hang Seng Index in Hong Kong. So that market is it's been in trouble for quite some time. It's just told you how bad it is. The question is, how much is it going to drop? Now, if we start to drop, it'll be like an anchor for everything else, because we're the largest market in the world, and if we start to shake, the rest of them are going to drop like leaves on an autumn tree. So you got to be real careful trying to find a bottom in here, my friend.
So you think the long-term trend will be further dropping, right?
Oh yes, we are going lower. We have lots of things that tell us that we have a much further to go. We got dropping commodity prices everywhere. We have debt problems all over the world. So this is not a good time to be in stocks. From my opinion, best to be in cash, looking for good value down the road.
Yes. For the FXI today, it gapped below, and
yes.
Even below the 7x6 level, it's below 40 now. So
yes.
do you think next stop will be double bottom?
Yes,
around
double bottom is what I would be looking for. A double bottom. Oh, we've got to go now, George. Thanks for calling in, and live every day in an attitude of gratitude, and may God bless. Thank you for joining us.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock in option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com. Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's